Alright guys, welcome back to a new video here on this channel. Today is part number 2 of how to use standard deviation. I think the first video was the most watched video on my channel. Thanks for this. But I think this is part number 2 and this part is more important because in the first part I only explained the basics, and today we go a little bit more into detail, and I think after this video you almost have my full model. So if you copy this and train this, you can get really great results. But let's start. So at first I just want to give you guys a quick recap. What is standard deviation? So we use the fib tool and we have a set of numbers. So we have 0, 1, -1, -2.5, 2, 3 and 4, so all negative numbers. And what we do is, you can see this here. So let's imagine this was price here, so the red line was price and we had a reversal here. What we can do is we can use the manipulation leg. So it's basically just, okay, which low was the last low and which low caused this up move. So this is a bullish example here. And so the last manipulation leg was this here. And what we do is we draw the 1 and the 0. So this is where you can move the fib tool. We draw it like this. So the 1 is down. And then you can get a future prediction. So you get all these levels here. And these are just statistical numbers, so that's nothing magical or something, but you can see you get these numbers here, and these are really relevant levels you can use as a target or also use as a reversal prediction. What I mean by this is, and how I use it, I'm going to explain this now. So at first you can see there are a lot of numbers and people don't get it most of the time. Okay, which number is important for me? For me, and that's how I use them. Other people, they do it in a different way, but this is how I approach standard deviation. For me, the only two relevant levels are the levels between, or the price between -2 and -2.5, and you can see I already called it reversal zone 1. So this is the first zone I'm looking for potential reversals, but that's not the case here. And the last zone is the -4 level, and this is most of the time. I'm going to show you some examples. And this is the last zone where price could reverse. And now the question is, okay, how can we use this? And I have a better example here. So method 1 is use it as a reversal prediction. So what we can see here, we had a bearish move down here. This here was the manipulation leg, and you can see you also use standard deviation to predict, okay, I want to long because my buyers are bullish, for example. I don't want to short here. We can use standard deviation to predict potential reversal levels. And you can see here, I know, like, I just draw the line, but price is bouncing from the -4 level here. It can also bounce from the -2, -2.5 level, but that's not the case here. So you can use, and this is the first method, you can use standard deviation to predict reversals. But also, let's imagine you catch the long here. You can also use standard deviation as a target. So you can take partials, for example, here at the -2, -2.5 zone, or also at the -4 level. And that's it. That's really simple. But now it gets even more important. You don't randomly want to long into the -4 level. That's not the case because price is not rating for the -4 level. And you need to combine this, and that's about it today. That's what I want to show you guys today in the video. And I started to draw out this example here. So what I always want to see is, and I use both. So you can see here method 1, use it as a reversal prediction. Method 2, use it as a target. And method 3, combine both, and that's what I do. So at first, and that's simply my model. So the first thing is I want to see, okay, price is trading against my order flow, against my buyers. So let's say I'm really bullish for today, but price is going down. That's perfect for me. And then price is hitting the -1 level. So this is like, okay, I want to long here around this area. But then I'm still looking for any fair value gap on the 1 hour chart or on the 4 hour. So this is the second aspect. So the first one is standard deviation, and the second one is fair value gap. I prefer on the 1 hour, but also 4 hour works also. And then the second or the third thing is you want to see a market structure shift. That's what we have here, but around the -4 level. So you can see we want to see here inside or next to the fair value gap, and also the fair value gap should be in alignment with the -4 level. You want to see market structure shift here. And then, and this is what I take as an entry. So this is my entry model. I want to use the first inversion fair value gap on the 1-minute chart. And yeah, so this is the next one. And now also PO3 gets a really important role, because as you guys know, I only trade New York session. So the most important candle for me is the 9 AM candle, but also the 10 AM candle. And yeah, most of the time 9 AM or 10 AM, both of these candles are the most important candles for me. I only trade these candles, so my trading session is maybe like 2 hours, and that's enough, because outside of these hours I would not recommend to trade this strategy, because it's not really profitable. Like you can wake up at, I don't know, or you can start trading at 4 AM, 5 AM. Don't do it. You're just wasting your money. It's literally like burning money. You want to trade the 9 AM and the 10 AM candle, maybe 11 AM. And what we want to see is we want to see a swing. So let's say, okay, 8 AM was accumulation. And then you want to see the 9 AM candle sweeping the 8 AM candle. That's what we had here. And yeah, what we literally trying to do is we want to participate or place our position inside this rig here. So you can see here in this example, it was really close. But yeah, we want to long in this candle when the candle is still red. And this is how you get these 8R trades or 6R trades. So I don't know, let's say my entry was here and we are targeting the -4 level. And yeah, oh, now it's bugging a bit, sorry. But yeah, this is how you get this 5R trades or something like this. And I have to admit, yes, of course, sometimes the win rate can be bad, but keep in mind, you need one good winner to vanish 5 or 6 losses. And when you're good at this strategy, it's literally a money printer. Yeah, and what we want to see is we want to participate most of the time in the 9 AM candle. But now sometimes we're not fast enough. You can also choose the 10 AM candle, but most of the time you only have a small rig. So if 10 AM 9 AM looks like this, 10 AM most of the time only has a small rig and just trades higher. But yeah, that's literally the model. And I think now it's the next part is I want to show you some examples. Alright guys, so now I'm back here with a example. This is literally, I think, last week or something. Oh no, it's actually 3 days ago. And yeah, I think this is a perfect example how the model works. I think the model appears almost every day. So I think you have something to trade every day. And you can see already, I marked out this Asia low. But I think, let's go back to the checklist. So the first thing was we want to see price trading against our buyers. And my buyers were really bullish today. Why? You can see we had this strong down move. My buyers were already bullish here. So my trust was not really big in this move down here, and we already had somehow a small V recovery. So I was like, okay, I want to see price trading higher today. And what I really liked was we still had these really clean Asia low here. And yeah, this is the second aspect. So the first one is we have standard deviation here, and we have an old low here. So in the example, I had one fair value gap, but what I also use is old lows, old highs. And I think some people will ask me, okay, you just told me we want to use the manipulation leg for standard deviation. So normally, and that's right, this here or this could be the manipulation leg, because this is the highest high here, and it's also just the London Open. So this would be the perfect high. You can see it also works because now the range here is a little bit bigger, but you can see we perfectly have here the first reversal zone, and you can see price traded lower. But that's completely okay. But yeah, I prefer it here because the real manipulation looks to me was this here, because we have this long wick here, but you can use both. So normally you always want to use the highest point in a short and a long example. But yeah, you can also use this range here. So I prefer this one here because this range is a bit smaller. You can see we hit the -4 level. This is the first aspect. Step number 2, fair value gap or old low, old high. yeah, we have this here. We have Asia lows here. London lows also good. So that's number 2. And yeah, number 3 was we want to see a inversion fair value gap getting ignored. And yeah, this was, I'm on the 3-minute chart. Yeah, so we can see here, we had a shift already here. But where was the first inversion gap? Yeah, here, perfect. Let's mark this out at first. That's it. Just wondering a bit. Yeah, I think I just want to, nope. Just want to go to this place here. So normally I don't really trade here, so let's continue. So, and this is already where price was doing the market structure shift. So we have a market structure shift here. I think this was actually step number 3, and step number 4 was the inversion fair value gap, but that's completely fine. And now you can see, and this is step number 5 what we had. We want to see a swing. So we have here the 7 AM candle. This is the 1 hour chart here, by the way. And you can see the red candle closed here. We have the wick here, and now we have the 8 AM candle. So we are a bit too early, but just going to show you what I want to see. And price traded already up. I took this trade, by the way, and to be honest, I was really stressed because I missed the entry here. Like, I was in front of my computer and I saw this, and for me, I was like, okay, maybe it's over because price traded really high here. And now you can see this new candle here is the 9 AM candle. So we already had this swing here. That's what I wanted to see. And for me, it was already over, but I placed my order here because this is the inversion fair value gap, stop loss below the low. And I'm not sure what I was targeting. I think, was it here? So I think I put my TP above this high here. But yeah, you can see still it was a 4.4 R trade. So let's play this out. And now you can see 9 AM started to sell down, but it perfectly reacted here from the inversion fair value gap. And then yeah, it started to trade higher. And now what we want to use then at deviation as well is we want to predict our TP, or where do we want to take partials. And you can see we had the first zone here, minus 2.5, minus 2. And this is what we also want to look for. We want to look that price is in alignment with these levels. So for example, we just don't randomly want to put our TP here. We want to look, okay, maybe is there a old high? That's the case. So for example, here we have some old highs and this could be your TP. But actually I was really convinced in this position. Like, this looks really, really bullish. So I was taking I'm not sure, I think I took this high here, but yeah, the perfect position would be up here. And you can see 6R. And yeah, price started to print higher. And yeah, that's it. This is my model. If you don't understand this example, just let me know. I'm really, really happy to help you guys. So just ask questions, don't be afraid. And yeah, if you like this tutorial, yeah, subscribe. And yeah, see you next time.